Hyperfocus is often the byproduct of aggressive, intentional ignorance. Most high-net-worth individuals understand that the primary obstacle to building a multi-million-dollar enterprise isn't a lack of information, but an abundance of it. In an era where the average person consumes 34 gigabytes of data daily, the ability to selectively ignore the noise has become a competitive advantage more valuable than a graduate degree from an Ivy League institution. This breakdown will examine the mechanics of selective ignorance, illustrating how the world's most successful capital allocators protect their attention to ensure maximum cognitive output. By the end of this analysis, the methodology behind filtering high-signal data from low-value distraction will be clear, providing a blueprint for long-term professional compounding. The human brain was never biologically designed to process a continuous 24-hour news cycle or the infinite scroll of global social feeds. Research suggests that the modern professional is bombarded with nearly 5 times as much information today as they were in 1986. Yet the capacity for deep, analytical thought remains fixed by biological limits. Data from the University of California indicates that it takes an average of 23 minutes and 15 seconds to return to a state of deep focus after a single interruption. For an executive earning $500 an hour, even 3 minor digital distractions a day can represent a hidden productivity tax of over $25,000 per year in lost high-value output. When people attempt to track every market fluctuation, political headline, and industry trend, they suffer from what psychologists call cognitive friction. This friction wears down the mental machinery required for complex problem-solving, leading to a state of perpetual busyness that yields zero net progress toward long-term equity growth. The most successful founders treat their attention as a finite capital resource, much like a venture fund treats its dry powder. They do not spend it on low-yield information that has a shelf life of less than 48 hours, preferring instead to invest in timeless principles and structural data. But here's where it gets interesting. The difference between being uninformed and selectively ignorant is a matter of strategic intent. In the world of professional investing, the signal-to-noise ratio determines the quality of every decision made. Noise is the daily volatility of a stock price. Signal is the quarterly earnings growth and the strength of the company's moat. Those who build lasting wealth focus exclusively on the latter. Consider the case of a real estate developer who ignores the sensationalist headlines about a national housing bubble to focus on the specific zoning changes and population inflow of a single zip code. By ignoring 95% of the national data, they gain a 5% advantage in the local market that actually matters to their bottom line. Statistically, frequent news consumers are found to be less accurate at predicting long-term economic trends than those who read a single weekly summary. This is because excessive data points often lead to overfitting, where a person sees patterns in random noise that do not actually exist in reality. A study conducted by a major financial institution found that accounts that were checked less frequently tended to outperform those that were managed daily. The simple act of ignoring the daily market fluctuations prevented investors from making impulsive, emotion-driven trades that would have eroded their compound interest over a 20-year horizon. The data tells a different story than the headlines. The most informed people are often the ones who consume the least amount of daily content. Every decision made throughout the day, no matter how trivial, depletes a portion of the brain's glucose levels and executive function. This phenomenon, known as decision fatigue, explains why even the most disciplined individuals can make poor choices late in the afternoon after a morning of micro-decisions. High-performing CEOs often automate or outsource low-stakes choices to preserve their cognitive energy for high-stakes negotiations. They might wear a uniform, eat the same breakfast, and refuse to check emails until noon, ensuring their brain is at its peak performance when reviewing a $10 million merger agreement. Selective ignorance applied to one's social and professional circle is equally critical. Those who build significant wealth often ignore office gossip, social media drama, and the opinions of those who do not have skin in the game. This keeps their internal mental environment sterile and focused on objective reality. When the mind is not cluttered with the temporary outrage of the day, it has the space to engage in first principles thinking. This allows an entrepreneur to see a market opportunity that others miss because they are too busy reacting to the same consensus-driven news cycle as everyone else. By ruthlessly protecting the executive function, These individuals ensure that when they do speak or act, their decisions carry the weight of a fully rested, highly focused intellect. Constructing a lifestyle around selective ignorance requires a systematic approach to information architecture. It is not about being lazy. It is about being an aggressive editor of one's own reality. The first step often involves a low-information diet, where a professional replaces hourly news alerts with deep-dive white papers or books that provide historical context. This shift moves the focus from what is happening right now to why things happen over time. Technological barriers are also essential. High earners frequently use software to block distracting websites, disable all non-essential notifications, and employ assistants to act as filters for their communication channels. This creates a moat around their time that others must pay a high price to cross. Furthermore, they adopt a need-to-know basis for project updates. By delegating the minutiae of operations to trusted managers, a business owner can ignore the small fires of the day to focus on the long-term vision of the company. This delegation is the only way to scale a business beyond the personal capacity of a single individual. In a world that profitized attention, the most radical act of self-improvement is to stop paying it to things that don't compound. The ultimate lesson of the most successful mentors is that wealth is not built by knowing everything, but by knowing exactly what to ignore. If this changed how you think about mental clarity, the next video breaks down the psychology of high-stakes decision-making.